Good evening. This is The Week Ahead, a show where we explore some of the key movements of what's going to happen for the first week of June. In fact, for the last 2 days of May as well. My name is Ibrahim Sani. I'll be walking through with you on this. We are broadcasting live from the All Asia Broadcast Centre here in Bukit Jalil, Kuala Lumpur. We start off with some of the economic calendar that's going to happen next week, which is, of course, on 31st May. The PPI index will be made known to us. Just to recap, the year-on-year April data shows 11.6%. Some analysts forecast it to be 12.9%. So we would know the exact date or the exact PPI on the 31st of May. Also on 31st of May, the M3 money supply is going to be made known to us. That's happening on 31st of May with about 5.5% money supply. That was the previous data, so we need to see whether or not it's going up or down then. Also on Wednesday, June the 1st, S&P Global Manufacturing PMI or Purchasing Manufacturing Index is going to be made known to us. This is, of course, PMI for the month of May. Also, some of the key highlights that we are going to look at. Companies are still rushing to host their AGM. This is because a lot of companies did take some time to report following the 2 years of the pandemic. Reporting calendars for many of the GLCs are not yet up to mark, largely because they are still trying to understand how they can report better for 2021 as well as 2022 for first quarter and so on. So some companies that are going to be making their AGM for next week include Syarikat Takaful Malaysia, Keluarga Berhad, which is going to report some numbers following their growth expansion program. IHH Healthcare Berhad is also going to be introduced because the impact to it will be on how businesses in Singapore and Malaysia are going to grow together. So that is something that could impact, say, for instance, Khazanah investments. Some companies that I'd like to keep an eye out on include Spritzer, largely because they are still a company that all of us are familiar with, the brand, and bottled water is, of course, on the rise following the pandemic. So these are some of the AGMs that is happening there. On the politics front, as we know, Ampang Member of Parliament, Zuraida Kamarudin, has left Bersatu for PBM or Parti Bangsa Malaysia, and she will remain supportive of the Prime Minister, and she said that after in-depth consideration, she has decided to join PBM or Parti Bangsa Malaysia. She continues to say items like she believes in the struggles of PBM, and she is very attracted to its core principles of multi-racial engagement. The idea here is, of course, a lot of movements when it comes to MPs and particularly ministers are now under focus. So in the week ahead, we're going to see more overtures from MPs, particularly cabinet ministers, on their pledged allegiances to some political parties. In fact, one such individual include Tengku Zafrul Tunku Abdul Aziz, the finance minister, because he has been asked to come clean on whether or not he had joined UMNO prior to his appointment as the finance minister during Tan Sri Muhyiddin Yassin's administration in March 2020. This, of course, comes after the UMNO Sekjen Ahmad Maslan confirmed that Zafrul, who is widely known as an independent senator, is indeed a long-time member of UMNO. And when contacted, PKR's MP for PJ, Maria Chin Abdullah, said that the issue of Zafrul and UMNO is also being debated and being discussed. So Tengku Zafrul, of course, went to WEF along with some key members of the Malaysian corporate brass, top corporate brass, in fact, including Zulkarnain On of PNB, including Tengku Taufik, CEO of Petronas. So there's a lot of rumors and talks on whether or not he has joined or joining or will join, or in fact he has joined another party, say for instance Bersatu, for instance. So all this is going to be, I guess, rumored to be conversed during that whole event next week. Finally, PKR has concluded their Supreme Council meeting and also their annual general meeting, and they have elected a new lineup. And of course, you can read all about that in your news as well as on Astro AWANI, because we are covering that quite extensively. The new lineup will support Datuk Sri Anwar Ibrahim's plight to take PKR on to the 15th general election whenever it is going to be held. So those are some of the key highlights of what's going to happen next week. We now move on to some of the individual stories that we have right now. Largely, the first story of the day that we need to focus on is on how a top Saudi official last week at the WEF touted that his country's dual strategy of increasing oil production capacity levels for export abroad while advocating for a domestic reduction of emissions, which is both in line with Saudi Arabia's net zero pledge. The minister, Al-Ibrahim, said that the increase in oil prices and revenue for the kingdom only helps it reach its 2060 net zero targets quicker. Now, this is in repetition of an argument that other oil-producing Gulf Arab states are making. Al-Ibrahim said that focusing on climate change without focusing on energy security could lead to more countries burning, quote-unquote, the dirtiest kind of coal in a time of need. Climate activists, as well as many scientists and energy experts, argue otherwise. They argue that they are advocating for an immediate end to greater investment in fossil fuels to keep global temperatures from rising further. Now, this is also pointing to other sources of energy like solar power. Al-Ibrahim of Saudi said that the kingdom is looking at establishing the largest carbon capture utilization and storage hub with 44 million tons a year. This is very critical because we need to understand more in the coming week how the conversation that took place at WEF is going to go on and impact policy making in key countries, particularly, for instance, OPEC key countries, which is, of course, we can argue that Saudi is leading that cartel. How will Saudi move ahead and try to establish that whole notion of green tech energy? That's a big idea that's going to happen next week. Another story is, of course, on an expert in an Asian studies that said that US President Joe Biden's efforts to advance the so-called Indo-Pacific Economic Framework for Prosperity, or IPAF, during his just concluded Asia trip will fail to deliver tangible results, as proclaimed as the unoriginal initiative is unlikely to win wide support. Embarking on his first trip to Asia since taking office in January last year, US President Biden on Tuesday wrapped up a 5-day visit to South Korea and Japan and was met with public protests in both countries. And we have to understand why this is the issue. Because while in Japan, Joe Biden attended the summit of the Quadrilateral Security Dialogue, called Quad, to talk up plans for the IPAF. In an interview with China media group CMG, Emmanuel Pastrech, the director of the Asia Institute in Seoul, said that the move could be designed as a way for the US to reassert itself in the region and act as a replacement to the failed TPP, or the Trans-Pacific Partnership, of which many of us remember fondly as something that was murdered and killed and butchered by the previous US President, Donald Trump. Now, this is, of course, hastily done back in 2017, but there seems to be no way back following the TPP failure. So Pastrech said that the IPAF is, in effect, an extension of the US economically driven Indo-Pacific strategy, which intends to exclude China and is full of Cold War mentality. Now, like the previous failed proposals, he says that the new IPAF is unlikely to make headway in the region. And the essential reason why they haven't gotten off the ground is because they don't take China as a partner. And this is meaningless, according to Pastrech, because if you are going to exclude China, nothing is going to take place or take root here in Asia, especially in the Far East Asia. And this, according to him, goes back to that Cold War issue. Pastrech also believes that the US is largely pursuing a so-called outdated mentality by throwing its weight around in the region with no presence here. He said that it must face up to the realities that the world has changed and that China is a major player on the global scene. So in the week ahead, we're going to be looking at more conversations regarding IPAF, how it is going to impact countries in Asia Pacific, especially that of Malaysia. And considering that Malaysia, the two largest trading partner for Malaysia are indeed China first, US second, and of course our friendly neighbor down south, Singapore third, how will we move ahead on this? So in the week ahead, we are expecting, in fact we are demanding the administration of the day, led by Prime Minister Datuk Seri Ismail Sabri, to basically state Malaysia's position when it comes to China and US. Are we going to support initiatives that is currently being done by the US? Or are we continuing to be riding on the coattails of China? Right now, nothing is being said. So perhaps in the week ahead, we're going to see some statements coming in from Putrajaya. Finally, we look at the global supply chain disruptions and how it must not disrupt demand. The president of the Central Bank of Netherlands, Klaas Knot, argued that this is not going to impact the business of many companies in the region. And he says that the commitment to pursue green technology at an international stage is going to be extremely clear. Now, this movement is going to be called the First Movers Coalition, which is going to look at the readiness of industries that is supplying green technology, items like steel, hydrogen, and carbon, and how this is going to ensure in one fell swoop the impact that it has on climate change. This is the story of the day, I suppose, when it comes to how the first world nation is going to push forward green technology. This is taken at Davos meeting WEF last week. This is Klaas Knot, President of the Central Bank of the Netherlands.
Many governments, if you're worried about sovereign debt, have of course rightfully used the window in which interest rates were extremely low and central banks were doing asset purchases, etc., to significantly lengthen the maturity of their debt. We know that in fighting inflation, you have two choices. You either do it forcefully and determined, then you have a short-lived spike in rates, but then it's a short-lived spike and rates can come down relatively quickly again. Or if you're too hesitant and you do it step by step by step, you run the risk that rates will have to remain high for much longer and possibly also have to be taken even higher. Now, given the relatively long maturity of the debt, I would argue that the first scenario is by far preferable over the second one.
That's the Volcker
and that's
shock.
why I challenge the fact that this imposes a restriction on monetary policy. And the last point I want to make is always we should think about this in terms of real interest rates, not nominal interest rates.
So in the continued pursuit of green technology, we need to understand a little bit better about how China's impact is going to be. And the climate, or China's special envoy for climate change, Xi Zhenhua, promised that China will strive to plant 70 billion trees in the next 10 years in a speech setting out the country's approach to climate change at the WEF in Davos last week. Now, Xi briefed the participants over China's tremendous efforts to pursue its climate goals, achievements of last year's COP15 Biodiversity Summit that was held at the southwestern Chinese city of Kunming. And he says that the country's new measures in protecting nature and preserving the environment is going to be continued onwards even further. In the week ahead, we're going to look at how China is going to be clearer on the impact that it has or the commitment that it took towards this green tech initiative. Because according to the Chinese envoy, China will take 3 specific actions: policy formulation, number 1, energy transformation, number 2, and forest carbon sinks, number 3. This is what they call a 1+N policy system, 1 being the core guidance on carbon neutrality, and N being the action plan to achieve it, promoting the green and low carbon energy transformation, strengthening forest carbon sinks, and responding to the Trillion Tree campaign that was launched by the WEF and striving to plant 70 billion trees in 10 years. Now, what we look at this is this. For this week ahead, we're going to look at how the WF's gathering last week is going to be impacting countries' policy moving forward. Because the theme that they had last week was history at a turning point, how government policies and business strategies are going to address some major themes, including geo-economic challenges, post-pandemic economic recovery, and of course the continued Ukraine crisis. We don't know how they're going to solve all this, but for now, some of the key ideas are being discussed and debated. We've covered it extensively at Astro AWANI. I would urge all of us to look at that story even further. We'll go for one short break. When we come back, we'll continue our week ahead. Welcome back. This is the week ahead. Last week, we saw the Singapore dollar continued its rise against the ringgit, reaching an all-time high. And of course, the Singapore dollar all-time high, initially it was 3.1, then it hit 3.2, and this is going to continue on even further, we think, because it did hit 3.195 midweek, and there's no sign of coming back. Now, the head of FX analyst at MonFX, Simon Harvey, said that it is largely due to the strength of the Singapore dollar, as preferred by the MAS, or Monetary Authority of Singapore. Now, he added there wasn't one individual catching event, but instead the technicalities of the Singapore's monetary policy that created this all-time high. He says that the sentiment around China also helped. Now, US President Joe Biden was weighing cutting tariffs on Chinese goods, helped lift yuan to its highest levels since May 5th. The Singapore dollar has been rising against the ringgit since late April, we know this now, and money changers saw a surge of people lining up to buy the ringgit following the week of April 25th, after the exchange rate rose to 3.17, up from 3.10 levels in early April. Experts spoke to pointed differing monetary policies by Singapore and Malaysia's central bank, and explaining why the Singapore dollar has been rising against the ringgit. In the meantime, the Singapore dollar did see the continued rise, and some experts that has been quoted by the press pointed to the impact that it has on Singapore pursuing an aggressive monetary policy by appreciating the Singapore dollar at a faster pace and at a higher level. Now, the authorities first tightened its policy in October last year when it raised the slope of its exchange rate-based policy band to allow the Singapore dollar to appreciate at a slightly faster pace. It then followed up with another steepening of the slope in January, surprising markets with an inter-meeting adjustment. And the currency strategist Sim Mo Siong has been quoted by the CNA in Singapore at the Bank of Singapore, noted that BNM has been keeping our interest rate stable, although it did a surprise rate hike last week, raising its benchmark lending by 25 basis points. But because of this policy divergence, it did benefit the Singapore dollar. And he said that the Singapore dollar is expected to stay strong in the near term. Although, according to him, there will be room for the ringgit to play catch-up for the next 6 to 12 months. So what I'm trying to say here is this: that the gap between the Singapore dollar and the ringgit will continue to be wide, if not wider. Now, this is not my view. This is the statements coming in from a lot of the FX strategists that we have interviewed. Here at Astro AWANI, on Niaga AWANI, we spoke to the MIER, or the Malaysia Institute of Economic Research, on this last week. Do check it out. So in the week ahead, if you want to look at how money is going to be spent, particularly domestically interrelated between Malaysia and Singapore, it's not going to be a good look for Malaysians, because if you do anything in Singapore, it's going to cost you at least 3.2 times more. Okay, one more short break. When we come back, we'll conclude our conversation on the week ahead. Okay, Penang-based electronics manufacturing solutions provider Synergence made a firm debut on the ACE market last week, and I spoke to the CEO on how it's going to impact its business moving forward. This is my conversation with Lai Yin Choi, the CEO of Synergence Berhad. Enjoy.
Currently, if you look at the landscape right now, the moving trend for this is actually the electric vehicles. whereby you need to address the power and also the battery issue that is facing in the electric vehicles right now. So if you go to a dealer right now to buy electric cars, I think the first question you will ask is that how long can the car drive with a single charge? Right now you'll probably be getting around 300 to 400 kilometers as a normal, and with the advancement in terms of the battery tech and also the control, the power modules, we are looking at the range of probably 600 to 700 range in terms of the drive range per charge. So in order to do that, there will be a lot of new revolution technology that will be coming out. And to address that is that a lot of this is you have to control in a way that if you use a normal operators to handle automotive product, it's actually a no-no, because they would prefer no touch line. No touch line meaning is that everything have to be fully automated and everything have to be fully traceability have to be complete, because all this data of productions have to be kept by the manufacturer, so that they have to ensure that they're compliance to the safety standard of the automotive. So this is just one part of the growing industries that's driving the electronics market right now. And another one is if you look at the 5G. So 5G is actually moving on right now very aggressively in our, especially in Malaysia itself, and also our neighboring countries. And you can see that there's a lot of devices is going to change, because going 5G right now, the speed is extremely fast, and you can do a video download in just a few seconds, and everything is downloaded. So in order to achieve that type of speed, the devices that have to be redesigned based on the 5G network and also the 5G's technology. So with that being said, there will be a lot of investment going on the CAPEX itself to enhance this 5G introduction into the market. And as you can see, recently there's been a few so-called big players, technology players have been investing, already initiated the investment into Malaysia. You have all these new so-called substrate players, advanced substrate players, which usually they manufacture those in the other countries. Right now, choosing Malaysia as the investment base to start up their factories. So their factories will be commencing operational probably next year or 2 years from now. And they'll be supplying all these high-tech modules that uses the SMT process. And they will use this advanced module to become intelligent chips. So these intelligent chips will then be mounted onto the PCBA, and they will be using it to power a lot of modules, especially the IoTs and all these mobile gadgets. Yeah.
Anyway, those are the kind of items that we're going to be discussing at the week ahead. If you've missed out any part of this show, just head on to astroawani.com, look for the week ahead. Look for Notepad, my show, because we're going to be discussing at length with Synergence. You can also look for some of the other interesting business news on Niaga Awani. Plenty of offerings for you. If you want to talk to me directly, just hit me up on Twitter at IbrahimSaniNet, because that's going to be a good conversation to be had. Until then, thanks very much for watching and have a good week ahead.